I'm going to talk to you about why Silicon Valley Bank is crashing. From one simpleton, look at me, to another, I'm going to explain this all in super easy terms. No annoying finance jargon. Why is Wall Street fearing of a resurgence of a 2008 banking crisis? Well, it has to do with Silicon Valley Bank and the Silicon Valley bros that bank there. So, what is going on? Well, a couple years ago, 2021, the market was doing great, and the VC bros in Silicon Valley, they were roaring in cash. Come on, the Chamathians, the people just dumping their SPACs, making so much money on this crypto boom, on the SPAC boom, on the VC boom, everything was going up. And these Silicon Valley bros were making fat cash. So what they do with their cash? They had to put it in the bank. And where do Silicon Valley bros bank? They bank at Silicon Valley Bank, the 15th largest bank in the US. This is no small bank. We're talking a big freaking bank. If this bank goes under, it will be the second largest bank to go under in US history. This is no joke. So Silicon Valley Bank is getting a lot of deposits in 2021. And when a bank gets deposits, it's a little weird. They're actually liabilities. They're not assets, they're liabilities because they don't own this money. They're just they're borrowing it from the people lending them, from you and me who are giving our money to the bank. The bank is borrowing that money, so that's a liability, and then they go and distribute it out. So, when they go and distribute it out, they're using their clients' funds. So they have to be safe, right? These banks have to be safe. They keep a little bit of cash, not enough cash. That's why I hate the US government and fractional reserve lending. I'll get into that in a second. And the rest they lend out. But Silicon Valley Bank, they're safe. So what do? They buy US treasuries. They buy the US government's debt, something that is risk free. They're geniuses. So they take all this money and they buy risk free debt. And why'd they buy so much? Why'd they buy $93 billion worth? Because I bet you the executive team was like, we're making so much money. We're getting all these deposits. This can't slow down. This won't stop. So I bet you they were looking at forward guidance and saying 2022 we're going to get all this money, 2023 we're going to get all this money, so we have to do something with our money right now. We better just, I don't know, go buy US treasuries yielding a whopping 1.9%. Yes, they took $93 billion and bought US treasuries yielding 1.9%. These Silicon Valley banking bros are dumb. Let me show you something. Let me just show you something. So here, this is the CFO of Silicon Valley Bank, the dude with the Chad smile, my man Daniel Beck. He's also really interesting. He's also the executive sponsor of the company's employee resource group focused on Black African American employees. So he's the perfect candidate to be CFO. He takes all this money and he buys treasuries yielding 1.9%. Now, I don't know what you know about treasuries, but this is how the bond market works. Let's think about this. They buy all these bonds yielding 1.9%. But now, the Federal Reserve, Jerome Powell, he hikes interest rates. Now, interest rates are at 5%. Why would anybody want these guys' bonds at 1.9% if you can get bonds right now at 5%? Think about it. If you have a girl and she's a 1.9, and but all the other girls now are 5s, why would anybody want your 1.9 girl? You know what you're going to have to do with your 1.9 girl? You got to dump her. You got to dump her, and you got to dump her hard. So that is what they're doing. They are dumping their $93 billion in bonds on the market, and they're selling them for fractions on the dollar. And why are they dumping them? Because there is a bank run. Okay, hear me out. Hear me out. Look on the left, Silicon Valley Bro Bank. In the light blue is their net loan, so they don't have this money on their balance sheet. The cash and cash equivalents, this is the important one. This little blue thing here, that's how much cash they have at their bank. That's how much cash. They have pretty much no cash at their bank. And all this green here is the treasuries they bought. So these are not liquid. If people come to their bank like, yo, I need my money, bro. The VC market's bad. I can't dump SPACs anymore. The crypto boom popped. Like, I need my money. There's no money. There's no money, right? It's only this. So all this little blue has been dried up, and now they're forced to start selling this green, and they have to dump their 1.9 girl for fractions on a dollar because everybody can get 5s right now. Everybody can get 5s. This is the problem. There is a liquidity crunch at this bank, and our man Daniel Beck here and the rest of the executive team went YOLO long on bonds at the bottom of the market. Why would you spend all of your money on bonds yielding 1.9%? It's the most ridiculous thing I've ever heard. It is so outrageous for a bank to take clients' money and buy risk free bonds. These bonds are not risk free because what happens is that if you take all of your money and some of your clients want their money back and you're forced to sell these bonds, but interest rates went up to 5% and now you have to sell these bonds, you don't have the money. So, this is the problem. So, what is going on now? This bank is dumping bonds. They're trying to raise money, and they're raising money by selling stock. And if you sell stock to raise money, your stock price goes down. And that's what we're seeing. They're diluting their shareholders. So the stock price is down like 60 something percent in a day. And there is a big, big, big chance this bank may just go under. And that could cause a cataclysm, causing other banks to go under as well. For example, something just interesting I saw USDC, Circle, crypto, right? Everybody transacts in USDC. USDC holds its money at like 8 or 10 different banks. One of their banks is Silvergate. I don't know if you heard about Silvergate, but Silvergate's a crypto ish bank, and they're going to go under, most likely. Okay, but that's fine. It's only one of 8 of their banks or whatever. They also hold their money at Silicon Valley Bro Bank. You see the problem here? Maybe now Circle won't have money. So if you want to redeem your USDC for dollars, you may not be able to. And it's this cataclysm, it's this cascading effect of really, really bad stuff. So, is the Federal Reserve, is the Biden administration going to step in and say, we are bailing out Silicon Valley Bank? Well, I freaking hope not. And that's a rant for another time. I'm tired of the government coming in and bailing out the rich guy. 250,000 is insured at Silicon Valley Bro Bank for the Silicon Valley Bros. But we know these Silicon Valley Bros got a lot more than 250K. But that's not our problem. The lower and middle class should not pay for the rich people because they were dumb and put more than 250 grand at a Silicon Valley bank managed by Daniel Beck and his stupid, cheesy smile executive team. I mean, this is just really, really annoying. Who are these people managing these banks? How can you be so dumb? I mean, seriously, how can you be so dumb? I'm a layman. I'm a layman. I got a mullet. And even I know not to go YOLO long on bonds with all my clients' money. It's just ridiculous, man. It's just ridiculous. So what's happening now? Well, these Silicon Valley bros, they want their money, right? If you have $23 million in Silicon Valley Bro Bank, you are only going to get back 22,750,000 because only 250,000 is FDIC insured. So it is in your best interest to pull all your money out as fast as possible, which causes more of a cascading effect, which causes more sale of bonds for fractions on a dollar, which causes them to have to sell more stock, which is just going to cause them to collapse. The beautiful bank run that we learned about in our history books. But these Silicon Valley bros are trying to pull their money out, right? Well, here's a problem. Hold on, look at this. Look at this. Yeah, good luck pulling your money out. Yeah, they're not letting you take money out. Yeah, this morning, it just so happened to conveniently be that their app is not really working and you can't really take money out. Oh man, this is not good. This is not good. So just to rehash, I'm sorry. I'm really pissed off about this. It's because you got these rich, stupid, powerful people managing our money, managing our economy, ruining our lives because of their stupid greed and ignorance. And it's just not fair. And I'm tired of seeing it. But, anyways, let me try to re explain this really simply. There's this bank. The bank did great in 2021 because they got all of this inflated VC money pumping into the bank. They were like, yo, we're making so much money. We're gonna make so much money next year. We're gonna even make more money next year. This dot-com bubble 2.0 is never gonna pop. We're gonna keep getting all this money in, and we gotta do something with our clients' money. Let's be smart. Let's buy risk-free bonds. They're risk-free, right? That's in the name. So they go and buy risk-free bonds. But they don't think maybe there won't be more money coming in next year and the year after that. And just maybe, our clients are going to want their money back. There's a chance. There's a chance. They never thought of that. They think only money comes in and never comes out of a bank. So what happens is they buy these bonds and you can't sell these bonds for what they're worth if interest rates go up because their 1.9 girl is not a 5. So they're selling their bonds really cheap in order for their clients to get their money out. And why do their clients want their money out? Is because the dot-com bubble 2.0 has popped and all their tech stocks are worth nothing. All their crypto is worth nothing. They're not getting VC investment. Everything is screwed. And to make matters worse, and this is something I didn't even tell you guys, guess what they were paying in interest to their depositors? Guess how much they're paying in interest? They should be paying zero in interest because they don't have the money to pay. They're paying 2.2%. You can't make this stuff up. So they're overpaying their depositors while they have no money. Oh my God. So then all this is going on, and then there's a bank run, and they don't have the money to support it, and it's all collapsing in front of our faces. And what is the US government going to do? We will see. But I bet you they're going to bail out these jerks with our taxpayer dollars, and the lower and middle class are going to get screwed once again, and the rich elites are going to walk away. Daniel Beck and his executive team are going to be like, I messed up. I'm not going to go to jail. I'm not going to get a fine. I'm going to go back to my wife with my tens of millions of dollars. And yeah, F you guys. F you. Man, I'm just tired of seeing it. So that's my rant. That's what's going on with Silicon Valley Grow Bank. I hope that makes a little bit of sense. Feel free to ask me any questions in the comments below. I will answer every single comment. I will explain everything. Thank you for your time.